Bring that ass back like a boom, 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 boom.
Hey folks, this is Supernova, and today for our educational concept video I have a thing that many people overlook, don't pay enough attention to it, but these are one of the most important and foretelling chart patterns that you can actually find. It's called the head and shoulders. And the head and shoulders, if it appears on the top, it's a topping formation signaling a reversal, a bearish reversal. Or if it appears at the bottom of the chart, it's usually a bullish reversal pattern. Now, it's characterized by two peaks on each side of a higher peak, speaking of a topping head and shoulders, and characterized by two downward movements in between a larger one. So let me just show you one that is more obvious and happened recently, and it was the S&P 500 chart. So the way that you can identify it is, as I said, if you're looking for the top, you're looking for, so we have one here, one top right here. So the chart is making a top right here. You can also look at this top as well, or I'll zoom out in a little bit and I'll show you an even bigger picture. So you're looking for a surge. This is at the time that this was produced, we were looking at almost at the all-time highs, and then the price goes down, obviously, moves to a higher point. So this is the left shoulder, as they call it. This is the head right here. Then you need another move down to form the so-called neckline, and then we have a third move up, which in essence needs to be lower than the head. So if this is the left shoulder, this is the right, this is the head, and this is the right shoulder. Now, usually the target of this move is, let me first draw a trend line. So you see this is our neckline. In this case, it's a little bit tinted to the right, but sometimes it's like this, but it really doesn't matter. All you have to do is connect the two the bottoms of the left shoulder and the head. So basically you create this neckline, and then your target is usually 100% the extension from the head to the neckline. So if we have this head to neckline, and we have right here, we can measure it, we have right here about 5% move, then we need to measure another 5% down from the head. So we're looking at the move right around, what was it, 505, something like that. So we're looking at the move right here, and as you can see, we almost ideally hit it and bounce back. Now, in order to show you what the inverse head and shoulder is, which is the bearish pattern, I'll just do something that you can do in TOS, and I'll just add a minus to the S to the ticker, and this will basically just revert the chart. See, it's a cool trick that I learned from Tintin. So anyway, this is the same thing that you are looking right here. So you have the left shoulder, so we're making a low. And let me just get the chart right here. So you're making a low, then you're making a lower low. So now you have the left shoulder and the right and the head, and then you're making a right low, which right shoulder, as I said, needs to be below the head. It doesn't really matter if it's dead even with the left shoulder. It's a good thing to have it at a relative same height or length or depth, whatever you want to call it, but it's not a prerequisite for sure. What is a prerequisite in it will negate the pattern if we have this low right here extending below the head, or above the head in the original version. So again, the same thing. You draw the neckline. Oh, that's not the right form. Sorry. So you draw the trend line by connecting the left shoulder and the head lows. In this case, highs, since we're looking at an inverted head and shoulders, and your target is again 100% move to the upside, so similar like something like this. So it's the same chart anyway. So now let me show you another example. And these are things that are a little bit oh, TSO. I was like Tesla. Okay, these are things that are you need to train your eye to see, but they can be very powerful once you start spotting them. So this is Tesla, and for the last rally that we have, you can clearly see, now that we know what we're talking about, you can clearly see that this was the left shoulder, this was the right shoulder, well, this was the head, and this was the right shoulder. These are almost identical. Then you have like the double top right here, and you have a double top right here almost. So what we have to do right now in order to get a projection for this is, now you connect the left, so as I said, you can connect the left shoulder, the head, and in toss you can just do extend to the right. So this is our neckline, and now what we can do is just measure from the high to the neckline. We just see the number right here is 27%, so we have 27% moving down, and 27% moving down is it's right about here. So this ideally would be the target of your downside move, and this one played almost perfectly. So this is a very quick introduction into the Head and Shoulders. I hope you liked it. What you really need to remember is that you need to have those two, the left and the right shoulder, lower than the head. They ideally should be at an equal height, almost identical. Of course, you cannot have it up to the tick, but ideally it should be fairly close in terms of the highs they reached or the lows they reached. If you're looking for the inverted Head and Shoulders, the target is always 100% from the neckline to the head. And another thing that you need to remember here, this pattern is negated, and I mean you cannot trade it the moment the high of the right shoulder is exceeded. So basically, let's just pretend that the chart ends right here. So now if we have a move with few bars right here on top of this pattern is negated. Same thing on the inverse. Let me just do the little trick. I really like it. So same thing right here. Yeah, let me just draw it for you so you can see what I'm talking about. Come on. Left shoulder, head, right shoulder. Neckline is, I don't know, here's the trend line. So right here, and if price needs to rally from here, right? Price needs to rally. So if price drops below this right shoulder right here, so if it drops below, well, yeah, that would be really weird. I cannot read the numbers in inverse, and it's like minus 1,125. But anyway, if it drops below this point right here, price pierces that and goes lower, then this pattern is negated and you cannot use it as a valid target for your trade. So this, guys, was a quick introduction to Head and Shoulders and inverted Head and Shoulders. If you have any questions, please post them in the forum, or post them in Discord, the chat room, or just DM me, and I'll get back to you as soon as I can. Thanks a lot, guys, and see you in chat.